Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I do each and every week, I've left my lines on the chart so you can see how the forecasts worked out. Where last week I drew this diagonal line from the close on Friday down and forecasted that this gap right here would fill, and that's exactly what happened. We filled this gap officially today on Friday the 17th as the market closed. You see this shadow down below the candle. Now, 80% of the time, gaps will fill like this. And then 80% of the time, the markets tend to reverse and go the other way. Now, interestingly enough, we still have a gap below the market here, but now we have a gap above the market here. So next week, I'm going to go against the grain on this one, but next week I think we could drop just a little bit on the diamonds. Now, we have a mixed bag here. Next week on the diamonds, I think we could drop just a little bit more, mainly because we closed below that 20-period moving average, and we did so on higher volume. And then we'll have to see whether or not we make a bounce and a move up towards this gap above the market. Okay, so again, first thing, we're probably going to see another drop with the continuation of this downside momentum, then a possible bounce in an attempt to fill the gap. Now, I don't think that gap is going to fill right away, but we will have to see. Now, looking at the small cap market, which is the Russell 2000 ETF, this is a little bit different now. We see a green candle on higher volume, and while the Dow was dropping, IWM was rallying. You can see down below, we have the stochastics moving higher. That's called a hinge right there. See, it's hinging higher. We see the CCI down here, while it's still pointing lower, we have a positive divergence, meaning we had lower lows this week from the previous lows back here, but we have higher lows on the CCI. So that's a positive divergence. Now, we hit the target right here. Remember, this is what I drew. I extended this out in this downward direction right here. And so we have hit this target right here. And now I believe we're going to bounce on IWM. So keep your eyes on the market. I'm just going to continue this in an upward direction like that. Testing these highs from here. I could erase this line now that that target was hit. And this is going to be my new target. That will bring us right back up to the 20-period moving average, at which time it's going to act as resistance, and then we'll have to see whether or not we pull back from there. But again, short term for IWM, I see it a little bit higher. Let me clean that chart up for you right there. We don't need that. We hit those targets as well. There's still an open gap above the market on IWM. Now, let's take a look at SPY, and then I'm going to go right to the VIX. The spiders, the S&P ETF here, hit the target right there. We have a spinning top. We have increase in volume. So for the spiders, I still think we're going to go a little bit higher because of this very, very slight gap right here. I think Monday and Tuesday, we could see a little bit of a rally and then a pullback after that. So again, like I said, not all markets are going to be trading in sync. So you got to pick and choose which positions you want to take, and especially option traders, be very careful how you're spreading the market at this particular point in time. So again, I think we're going to see a little bit of a rally early on, fill that gap, and then I think we're going to see much lower prices on SPY towards the end of next week. So initially, upside target to fill the gap of 464.97. This is a two-part forecast, by the way. Upside price target 464.97, and then ultimately a pullback towards the end of this month down to 455.38. Now with that, I'm going to hop right to the VIX, and this really played into the forecast for the spiders. Notice the candle on the VIX. Now this was also a two-part forecast where initially I said we would go down and then bounce. Well, we did that. We're at the pivot point here on the VIX. See this little pivot here? We went up today. However, today we close with a long shadow above that candle right at the moving average. Now, short term for the VIX, I think we could see a pullback to this short-term trend line right here, and then a bounce. So I'm going to draw that out for you. Now remember, for the most part, the VIX is inversely related to the S&P. So I'm going to do this, a little bit of a pullback, and then right back on track to ultimately fill this gap. Because, and I say this once, I'll say it many times, it's an oscillating index. It's not a stock. And that's why over the history of the volatility index, 100% of the gaps have filled. So that's why I'm keeping that as a longer term target. Again, this is going to be out into January 8th, but I think that by then that gap will fill, and therefore that could push the markets lower overall. Remember, it's for the most part, and I say that a lot, for the most part, it's inversely related. There have been times where the S&P and the VIX have both gone up or both gone down, but this candle right there tells us, again, maybe just that slight pullback and then the bounce from there. Now let's take a look at the big one. The one that's moved most for a lot of our traders has been the Qs. And this is very interesting, again, because we hit the target early on in the week. This was a gap fill target. We have not yet bounced. Now, I do believe early on, Monday and Tuesday, we are going to see this bounce in the Qs. However, the bounce is going to be met with this moving average that is still going lower, at which time we could see a pullback from that moving average because the moving average will most likely act as a resistance point. Okay, so keep that in mind. If you're thinking about buying any of the tech sector right now, you have to make sure you're trailing your stop or at least establishing sell stop somewhere below this support level down here. And then as the market moves up, make sure you are trailing your stops up with the market. Again, very short-lived. We have heavy resistance up here at the top, right around 400. Our option traders are positioned very nicely with the put spreads on the Qs and the spiders and now in IWM. We do not have put spreads on the diamonds just yet, but if you are one of our members, understand that especially for the IWM, if we close below 210, let me go back to that and mention this because this is important. Had some comments and questions about this. If we close below 210, which is this major support level down here, we're not going to hit the panic button. There's a transition taking place. If we close, like I think we will eventually, below 210, that support level is going to reverse its role and turn to resistance. We will then be making the transition from long positions that we currently hold and eliminating the positive delta and moving more full-fledged into bearish strategies. Again, it's a transition. For those members that are wondering about that, I will be sending out a special video alert explaining exactly what our plan is so you can relax with that. If you're not a member, then maybe you might want to become a member. All you have to do is go to marketrebellion.com, click on the link right there, and you can see that we have a lot of services right here. The Oracle Hour is what I do every Wednesday, and I go through a rapid-fire stock analysis of over 30 stocks in 1 hour, sometimes 40, sometimes 50 stocks in an hour, and that's a lot of fun. That's the most popular service that we currently offer. And again, if you're interested, just go to marketrebellion.com. All right, enough of that infomercial, right? All right, let's go to ETHE. This is Ethereum. I said we would pull back and bounce. Remember, this was a two-parter, right? We did pull back. We filled this gap. We're now starting to bounce. This is a spinning top right there. And we have a mixed bag, again, with the oscillators. The stochastics is crossing, but we still have a slight positive divergence here on the CCI. I would not be surprised at all to see the CCI start to move up and hinge up. So I'm expecting at least a slight bounce next week in Ethereum. However, I am keeping this longer term target at the top for Ethereum. Let me just give that to you one more time. That is a price target of 41.05 for Ethereum. Again, if you're trading the crypto or the Bitcoin market, you have to keep your stops in place. Make sure you're putting them below key support levels. In this instance, this is a gap fill support level right there. Keep your stops in place and make sure that you're managing risk. That's all I have for now. You have a great weekend, and we'll talk to you soon. So long.